Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points. If you're new to the channel, make sure to subscribe. This is the place to go for high quality, free trading education. Now, without further ado, let's jump straight onto the chart. In this video, I want to speak about AUDUSD because at the moment we do have quite interesting price action and structure. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect of this market. Then we will move to the order flow by checking the commitment of traders, which is what the non-commercials, so the biggest speculators, so hedge funds, are doing in the market. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what do we see? Now, from a monthly perspective, we can see how at the moment the market is breaking above a quite strong historical structure level. In fact, this zone was acting as previous support here, again support here, again support here. The market then broke it to the downside with this red candle in which we had the close below all that support, and now that previous support is turned resistance, and what we got in fact was a retest of this previous support and resistance, and then the start of this rejection lower. Now, in a situation like this where we can see how the market is now breaking back above the zone, this previous resistance should once again be turned support here. So what we could expect after a break back above this level is a retest of this previous resistance turn support before then getting a rejection higher. So essentially what we would like to see is short-term bearish price action before then a longer-term bullish continuation. Dropping down on the weekly, what do we see? Now, from a weekly perspective, we can see how now the market has just created a perfect test of this previous weekly resistance from which the market created this red candle here, which has now turned support. The market broke it to the upside with this impulse, retested it, and is currently rejecting it to the upside. And in a situation like this, we could expect more bullish price action away from this zone. Going down on the daily, what do we see? Now, from a daily perspective, first of all, I did speak about AUDUSD a couple of times in the past few days. I spoke about it after the creation of this M pattern. From here, I made a full breakdown explaining all the reasons for which we could expect this rejection to the upside, which is in fact exactly what the market gave us. And then again, after this impulse, I explained all the reasons for which we wanted to see this correction to this level, and then the continuation higher, which again is exactly what the market just gave us. And by the way, I will link in description this previous analysis so you can go and check it out for more free education. I will link both of them. Now, going back to our current situation from a daily perspective, why is the market rejecting this area to the upside? That is important to understand, because if you don't understand this, then you definitely are missing some pieces of a market structure, which is one of the most important things. If you look left, you can see that this is exactly the previous daily resistance turned support. All this move to the downside started exactly from here. And as we have now broken above that zone, this previous resistance is turned support. So we did in fact expect this retest and then a rejection to the upside. It is also important to keep in mind that as we have an impulse, and we want to measure the correction, we have to take our Fibonacci from the low to the high of this impulse. And if we do that, if we take our Fibonacci from this low to this high, we can see how the market retraced exactly to the 50%. Now, the 50% was the Fibonacci level that was aligning the best with the previous resistance turn support, creating confluence of support, which is exactly the reason for which the market respected it and rejected it to the upside. This is a concept that I spoke about many times. Now, in a situation like this, the next move, if the market will continue pushing to the upside, and essentially complete this impulse, could be a correction to this new previous daily resistance turn support before then getting rejected to the upside. But before we continue our analysis here on the daily, let's first check the commitment of traders, which is what the non-commercials, so the biggest speculators in the market, are doing, so hedge funds. we check the data for the AUD. Now, if we check the data for the AUD, it is important to keep in mind that you are actually already checking AUD-USD because all currencies on the spot are traded against the USD. So if you're checking the AUD, it's already AUD-USD. And what we can see here with the last reports is that net positions have been growing. We went from a low of minus 51k net positions. We're now sitting at minus 33k net positions. So we had an increase of the net positioning, showing how institutions are starting to move to the long side of AUD-USD, meaning that we don't have any confirmation of this. But if the market actually completes this impulse to the upside, so if we have more bullish continuation, at that point, we should definitely get a correction because no market can just go up forever. And if the correction goes back to this previous daily resistance turn support, this would be a very interesting area inside of which we could be looking for a potential rejection higher at that point for the completion of this impulse correction and impulse pattern to the upside. So if the market does create this move and correct, how we could be approaching this rejection higher. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point we could be looking for a potential rejection higher for the market to complete this impulse correction and impulse pattern to the upside. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, that is all part of the mentorship program, which you can find at transparentfxtrading.com. Here you have the possibility to gain access to my entire course with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns of the Telegram signals, the COT data software, which is the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower here past the testimonials, you will see that there is a massive promotion that I'm currently running in which you have a big upfront discount from $497 all the way down to $97 for lifetime access to the mentorship program. And as an option, since I have partnered with the forex broker Blueberry Markets, if you open an account with them after you join the mentorship program from your student dashboard, you can get a full refund credited back into your trading account. And if you scroll lower here, you will see that there is still time to join before the offer expires and the timer goes back and essentially the timer hits 0. However, spots are limited, so if they get filled before the timer goes to 0, then the offer will end and price will go back to normal anyway. So I really suggest you take advantage and join directly from here in order to gain automatically access to the email and password that you will create during the checkout process. So definitely looking forward to have you on board. If you enjoyed the video, make sure to smash that like button and comment below. It really does support the creation of more free analysis education and updates for all of you. And I will see you in my next breakdown.